Hello, this is Chris Lawson and welcome to my channel. As we approach the tax filing season, I want to talk about 4 income tax deductions that are sometimes overlooked by real estate investors. Before I get into these deductions, my goals with regard to my personal situation are to make as many of my expenses as possible a tax deduction. That includes business expenses as well as personal expenses. And my second goal every year is to bring my taxable income as far down as possible so as to lower my tax consequence to Uncle Sam. Based on my experience, there are at least 4 deductible expenditures that are sometimes overlooked by real estate investors. The first is vehicular mileage. Now, I personally drive more than 20,000 miles per year, visiting my real estate and conducting other business. The IRS allows 57.5 cents per mile to be deducted from your income taxes as expenses. This will result in more than $11,000 in expenses that I can deduct from my income, which will result in a lower tax liability for year 2020. The second is home office equipment. This year I bought a printer, scanner, camera, and other equipment for my home office, and I will write these expenses off as business expenses to continue to bring down my taxable income. The third deduction is meals. Several times per year, I will go to breakfast, lunch, or dinner with real estate professionals and colleagues, and we will talk real estate. These are expenses that are also deductible from my income. Lastly, consider putting your children to work for you. I hire my children to work in the yards of my properties for me, and the money I pay them is non-taxable as long as it's $12,000 per year or less. And it creates an expense for me and brings my taxable income down. I hope you enjoyed learning about these 4 tips to help you reduce your taxable consequence. If you like this message, please click that like button, turn on your notifications, and subscribe to my channel.